Good morning, traders. It is Wednesday, January the 30th. Taking a look at the morning charts, we have the US dollar index here. You can see we've got this downtrend that we've had, and we more or less have broken down below this bear flag, and price really broke down, a little kiss goodbye, and it's starting to pick up speed. Now, in overnight trading, we saw a little bit of a pause after yesterday's drop in the dollar, and this morning we're seeing it continue down, trading lower. Now, if this continues, we're going to see equities probably continue to squeeze a bit higher. Eventually, once the US dollar gets down to this level, there will probably be some type of bounce that will be a pretty good correction in the equities market. But overall, the broad market is still holding up extremely well, and really it looks as though it could continue to march higher for a few more days as the US dollar comes down into a key support zone, at which point again could trigger a pullback in the equities market. Now, just seeing this drop here, you've got this high, you've got this low. You just take that measured move from the high over here down here. The downward thrust is down into the support zone. So that's kind of where we're looking for a target for the US dollar index. And of course, a lower dollar means higher commodity prices. Now let's just take a look at the price of crude oil. Crude oil continues to inch its way up. It tagged the $98 level this morning right up here. Continues to march. Yesterday afternoon had a little bit of a pop, and we're seeing, if we just zoom in a bit, you can see we kind of broke out this little bullish pennant formation that I pointed out the other day, with 98 as the next target, and we came up and we tagged that 98 level this morning. Really the key level here, I think, when we're going to see some big sellers step in, is this $100 mark. Now, that not only is a century number, but it's a previous high, which was sold off with a very strong correction afterwards. And not only that, but the market is getting pretty extended to the upside, and once it hits that level, there's likely going to be a pretty good wave of selling. Now, I am more interested actually in possibly taking a small short position at this level using an inverse ETF. I think we could see a pretty sharp pullback, and if we do get a decent pullback, it could come all the way back down to the 94, 92 level. So that's kind of where I'm looking, and the more it can grind up here and continue to get overbought with the market, the closer it gets to that 100 mark, the better the chance that we're going to see a snapback reversal, either a 1 or 2 day snapback, or we could actually really see it break down and give way and have quite a sharp drop. So that's kind of what I'm looking for going forward in crude oil. Looking at natural gas, we're seeing it trade a little bit higher this morning. Overall, we came down into a more or less a very tight falling wedge. Just looking at this price action here yesterday, this wedge continued to come right down, and we came right into a mid support zone right through here from these lows through this consolidation area. And the fact that we've got this falling wedge, we're a little bit overdone, and we also broke this previous pivot high back here. We put in this more or less a little bit of a cup and handle pattern and that breakout. So the fact that we've broken this high, we've pushed to a new high. Now this could be a higher low, and we could be starting to trend up. So that all these things coming together are pointing to a bounce at minimum in natural gas. Hopefully we get a bounce around the 340, and it could really be the start of another trend similar to this, where we just see it continue to march its way up and get up to this 370, 380 level eventually. Looking at precious metals, here's the gold chart, 4-hour chart of gold. Yesterday we started to we had a move up yesterday morning, and in overnight trading we're seeing continued move up. Here is yesterday's price action. Really, we're pretty much trading flat on the day. Gold's pulling back a little bit. It popped out of its little bullish mini cup and handle pattern here that I pointed out yesterday. We've got this cup and handle, it popped, and it's just kind of flirting there. Of course, it's got this resistance zone, this consolidation here it's trying to get through. If it can get through that, then the next stop hopefully will be somewhere up here around the 1685, all the way up to possibly 1695 if it can get a lift and get up to that level. Looking at silver, here's a 4-hour chart of silver. Pretty much the same pattern. Overall, the metals are still in a downtrend, but they are looking as though they're trying to put in a bottom, and we're playing more or less an oversold little dip here. And with the US dollar breaking down, a falling dollar should help lift precious metals. This morning we're seeing silver move up a little bit higher. More or less it had little Little consolidation here, sold down and it popped. We're seeing it trade a little bit higher this morning, up about 0.5%. And again, now we've got somewhere around the 32, which is a whole number. That'll naturally act as resistance. And just taking this measured move from here, we've got a bull flag forming here. Take that measured move to there. If you flip that to the upside, we've pretty much got a 32 target going forward. So you've got not only a measured move, but you've got this whole number which will act as resistance also. And of course, we are in a downtrend, so it's unlikely we break this previous high. Usually you stall out before a little bit lower. You usually get lower highs, lower lows. So this acts as a pretty strong target and resistance zone going forward. Looking at gold miners, gold and silver miners both had a nice bounce yesterday. They're very oversold, and just looking at the price action, you can see we're something similar to right back here. And you can see we could have a couple more days, a few more days of higher prices. And of course the drop was pretty severe. We've got resistance back up here around the 44. So there's still potential for a pretty decent pop from here. And of course that also means if this pops, we're probably going to see precious metals themselves move higher also. And that's, I didn't really want to get long stocks simply because the equities market could pull back at any time, and gold is more of the safe haven. So even if the equities market pulls back, we'll probably see gold hold up better than gold miners. And so I didn't want to get involved in the stocks. I wanted to go physical bullion just because of that possibility. Looking at bonds, bonds continue to move lower. They're down sharply again today, another almost 0.5% this morning. The trend is down. We're making another new low down here. It overall is starting to look pretty extended. May have another session or so going down, but overall it's looking pretty stretched to the downside, and a bounce in bonds will mean we'll probably see a pullback in the equities market. But really we're starting to see quite an unwinding of the bond bubble. It's starting to really pull back in a nice controlled manner, and we're going to keep our eye on things. It probably form another big bear flag going forward, and probably another move down, though we have seen a nice 1, 2, 3, 4, 5 wave correction here. So we could see a bottom and chop around here for some time and build a little type of consolidation before it continues to break lower. Looking at the SP 500, here's the SP 500 chart. This is the daily SPY ETF. You can see we continue to grind our way up. We're pushing it into overbought territories, and we've got pretty good room for a correction. This type of move isn't sustainable. We're going to have to correct eventually, and of course it'll bring it probably all the way back down to the 20-day moving average, and there is that's the halfway mark, and really it could come all the way back down to possibly even this blue trend line, bringing it right back still in to fill most of this gap from the breakout level. Very similar to what we see here. You see a strong run, continues to move up, gets extremely overbought, and then comes all the way back to almost being to where it broke out several weeks earlier. So I know everybody's getting anxious, wants to get long more opportunities, but really if we hold off, we should be able to eventually get an opportunity to get back in just after the news of the fiscal cliff. Still, those prices, they're not too far away in terms of sell-offs. We're really only a 3 to 5 day dip, and we're right back to those levels with a good opportunity to get long equities again. Looking at the futures this morning of the SP 500, here you can see we continue to march higher. We still have a bullish pattern on, let me just get rid of this 20-day moving average. Still have a bullish pattern. Yesterday we had the market run up, and in overnight trading we're seeing it flag sideways. Generally that points to higher prices, and of course a falling dollar also means higher prices, so we could continue to see this stretch its way a little bit higher as the US dollar pulls back and really helps feed this equities market higher. Anyways, that's it for this morning, and I'll talk to you a little bit. Bye bye.